Good morning, everyone, or at least good morning where we are here in the UK. If you might be joining us from another part of the world, so from wherever you are joining us, you are more than welcome to join us for this morning's Forex session. Before we start, I know you have seen this many times before, and I can see it over on David's screen as well. Please just take a second to look at the disclaimer. This can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Right, just take that down, and just a quick look at the calendar. I think we can see here there's just some UK news. In fact, I think the time is wrong on my Forex Factory calendar. I think it hasn't gone an hour. The news for the UK for GBP is actually at 9:30. This is summertime, so I always get confused sometimes with the times changing, the clocks moving backwards and forwards. It can be a bit confusing. Just take if you've got a calendar, just make sure that it is up to date. For some reason, this doesn't update automatically. I've got to go in and change it on Forex Factory. Anyway, thank you for so much for joining us. We've actually got a couple of items that we want to cover specifically. We've had some emails come in from some of our users, and they're really great. We've had some really great questions, and they're questions obviously that our users would like answers to, but they actually also the questions can equally apply to other traders as well. So I've got a question. I know David has also got a question he wants to answer, and we'll also look at what's going on at the live edge of the market. I've actually got MT5 up. This is my dollar index. It actually comes as an instrument with, this is a demo account I've got with XM, and it's great because, as I said, I've got the chart here. But as part of your quantum tools, if you don't have a dollar index offered by your broker, that we do offer a dollar index, a euro index, a yen index. We're also working on a pound index as well. But the key level for the dollar, this is yesterday's price action. We can see huge update for the dollar yesterday. Very big moves in markets yesterday, despite the fact that it was actually a national holiday in both Canada and the US. And those of you who were with us last night, I did say the key level for the dollar was this one, which is the R4 on the Camarilla, which is 97.44. It didn't manage to close just kind of above it, as it were, but I said this is the key level that is now for the dollar index, and in fact it's actually pulled back from the R4. The R4 level on the Camarilla, if you use Camarilla to identify important levels on your chart, it is one of the key ones to watch out for. This indicator we've actually developed with 6. Most traders take, if it breaks out above the R4, that's normally taken as a potentially a valid breakout, but as we know, breakouts can only ever really be validated with volume. But we've actually put 2 more. We've put R5 and R6. If it goes beyond the R6, then it really is going to take off. Now this value, this is on the daily chart for the Dixie. The way we've calculated these values is these levels that you see here will remain in play for the remainder of the week. But if you are on the faster time frames and you say you go down to the 5-minute chart, certainly up to the hourly, the levels are different. You'll see the R4 is way up above there, and these are the levels that change on a daily basis. So every time the platform updates, the levels will change, and this is the pullback that we're seeing in the faster time frames. I'm just going to stop there. I'm going to pass to David, then we'll come back. I've got a couple of things I just want to make sure that you're aware of what is happening today from a political point of view that is really going to impact certainly the euro, and as I said, and we'll go straight on to one of the questions, because as I said, it's pertinent to all traders really.
Thank you, darling, and unlike last night, I've actually remembered to switch my microphone on, so hopefully I'm coming through loud and clear. Yes, Anna didn't hear me either, but there we go. Very warm welcome wherever you are in the world. If this is your first time coming along, we run this as a two-hander, Anna and myself. We've been trading for around about 20 odd years. We had a meeting with someone yesterday who who was very familiar with Anna and what we do, and was also surprised how long we've been trading. So we started long before the internet began. If you do have any questions, please just drop them in the chat box, or if they're short questions, if they're longer ones, we will try and answer them on air for you. Just to pick up on what Anna was saying there, there's several sort of topics that we want to cover today and questions, but what Anna's highlighted there with the dollar index is really classic in terms of what we have to decide as traders that we're trying to do, because on the daily chart, the dollar index is certainly looking very bullish. But on an intraday fast chart such as this, we've got a bearish pullback. And really that's what it comes down to. It's an understanding and appreciation of the fact that your time horizon is everything, because that will define what it is you're trying to do, and what you're trying to do in your time frame will be very different to what someone else is doing in a slower time frame, where they may well be pointing in a completely opposite direction. And essentially that's what trading comes down to. It is very much about timing and getting your timing right. And in a sense, you're never wrong. It's just your timing that's not right. And it comes down to this whole issue of focusing on a very limited portion of the time frame, whatever that may be, whether you're a slower term time trader, you're a longer term trend or swing trader. I don't particularly like those terms, but basically looking at the slower end of the market as opposed to the faster end of the market, and having an appreciation of what it is you're trying to do, but more importantly, accepting the fact that you are probably trading against a trend in a slower time frame, recognizing that, recognizing what you're trying to do, and understanding the fact that all price action is self-similar. It is very much the whole business of the Russian dolls, where you've got a tiny little Russian doll inside, and gradually it gets bigger and bigger until you get to the outside. And all of those wheels within wheels, if you will, are rotating at different speeds, and they are rotating in different directions. For those of you who are on the education program, I know we've got one or two in the room today, I remember well creating a graphic where it was literally that. It was a whole series of cogs, little wheels within wheels, getting bigger and bigger, and all rotating in different directions. That is what you are facing as a trader. You have to accept that and define what it is you're trying to do. And the problem for all of us is that it's very easy to get in on one time frame, for the trade perhaps not to go in the direction we want it to go in, and then we start to look for validation in slower time frames and say, well, actually, okay, I can see it's maybe a pullback, and actually longer term I'm going to be okay. We all do it. We've all done it. It's so easy to do. To have the discipline to define what it is you're trying to do is very, very hard. It is one of the hardest things to do. It's not the hardest, but it's certainly one of the hardest things to do, because it defines what you are on that particular trade. And you can be a speculator, you can be a longer term trader on different positions at different times of the day. It doesn't matter. You don't have to define yourself as one thing. What you do have to do is define what it is you're trying to do on that particular trade in that particular time slot. I'm just going to pass back to Anna.
And actually, that brings me to the answer to the question that, as I said, I believe it's in the room today, and it's someone who has the full package, but doesn't. I don't believe he's on the program. The program, we take elements of the program when we go through them. Obviously, volume price analysis. We talk about the fundamentals. We talk about related markets, etc., etc. The Forex program is a complete Forex program. In fact, I had a message from someone to say, "My goodness, it really is a complete program." You can certainly, you can take from what is written in the books of the VPA methodology. You can blend it into tactics that maybe that you are using at the moment. You can trade as simply on price action. You can be, just use technical analysis, but you will find fairly, there will come a point in your trading that, it is not just about the technical side of trading. You have to begin to appreciate how there is this the relationship between what you're seeing on your chart, how that's being influenced by the fundamental news, by the political news. Then you soon begin to realize that some of these currencies and currency pairs are also impacted by what's going on in other markets, such as if you have a Canadian dollar as part of your one of the portfolio of currencies that you like to trade, then you begin to realize that oil is going to impact. It's going to have a relationship with the Canadian dollar. And then you've got market sentiment, overall market sentiment, risk on, risk off, which are the currencies that are going to move more, that are going to be impacted, they're going to reflect what's going on in related markets, the broader markets. And of course you've got the whole psychology of trading, and then you've got the money management and the mechanics of trading. That is all part of our complete Forex program, which is why we put it together. But everybody starts with technical analysis and with the selection of the currencies and currency pairs. Now the question is, well, I want to trade the 30-minute chart, so what's the best pair to trade? That's not really the question, how to approach it, because it's not going to give you an answer. And it's a simple question that has not a complicated answer, but it has a number of issues that you have to be aware of. And the first issue is for example, is where you are in the world and what session you think, or sessions do you think you are going to be trading. This is London, this is Europe, and we're now going to go into London. There's a lot of activity at this time of the day. And it's going to be reflected in certain currencies more than others. So you have to be aware of what is the volatility, what's going to be moving. That's the first thing. So the first thing, what time are you going to be sitting in front of your that 30-minute, I'm assuming here, you're going to be taking trades. Maybe you're going to be leaving them on for a session and a half, or maybe even overnight. But you have to, where is your start point, as it were. So let's look at, so I've just highlighted euro dollar. In the program, we actually calculate a volatility coefficient, and how you can, so which ones move, and etc., etc. But if you don't have access to the program, you've got to go and look up something like a Forex volatility calculator. This is the one from investing.com. You just go in and you highlight the currency. I'm talking about a currency pair at the moment. So this is euro dollar, and this is what it will tell you. It will give you the daily volatility in pips. So that's on a daily basis. Then it will take you to the hourly and the weekly. Now we know, for example, anything with the euro, obviously it's going to move more in this, at the time we are at the moment. Is it going to move overnight in Asia? Well, yes, but possibly not against the dollar. Why? Because in Asia Pacific, the currencies that are at the forefront are going to be those local currencies. So you've got the Aussie, you've got the New Zealand, and of course you've got the Japanese yen. So first of all, you have to select, what is your time frame? What are the currencies that are and currency pairs that are likely to be impacted during that session? And of course, you've got the fundamental news. You're not going to get European news in Asia Pacific time. You're going to get so it's local news. So that's the first thing you have to decide. Then you look at the pairs that you want to focus on, and that again will be dictated, as I said, where you are in the world and the time that you are looking to trade. So for example, I know we have traders on our program who are very, very disciplined and will only trade maybe 3 or 4. And if you're just starting, I wouldn't even think of going to 6 or 7 or 8 or 9. You're just spreading yourself far too much. I think we have one trader who just does 3. He does something with the British pound. It is a crossed pair, and I think maybe a euro. So that's your currency. What is the currency, either the euro or the British pound, we have here at the moment with the UK and Europe, and then you pair that. So you maybe have a euro dollar, maybe you have a cable. You could even have an Aussie dollar. An Aussie dollar is, I know I said about local currencies, well, the Aussie is one of these, because it's a risk currency, sometimes it will, not sometimes, it will often deliver a really good trade out of its, home environment, as it were. Its home environment is very much the Asia Pacific time zone. So that is what you have to do. So, but it's also a matter of trial and error. Next question is, when you choose your pairs, how much do they move? This goes back to the volatility. Is there enough movement in the pair? On a 30-minute chart, yep, fine. Is it going to move? Is one pair going to move more on a 30-minute chart than another pair? So again, you have to go back to your the volatility. Go back here. Let's have a look what the daily value is on this is the hourly chart for euro dollar. So what have we got here on average? What have we got? We've got 7. This is let's have a look. Got 20, 25 pips. It's not huge on an hourly chart. Now the euro dollar, the spread is going to be quite tight. So it's, you say, yeah, it may not move a lot, but because you're not having to battle a wide spread, that's why a lot of traders use trade euro dollar, but it doesn't move uniformly throughout the session. At other times it's going to be boosted because of, as I said, fundamental news, political news. And I'm focusing on the euro because today is actually a really important day for the euro. We have Angela Merkel speaking today, and obviously we have the Italian budget saga that's been going on between Italy and Brussels. And this is what I was saying to you earlier. By all means, select your pairs. Look at the technical picture for the pairs, look at the technical profile for the pairs, then you have to be familiar, well, when is it likely to move? What is the fundamental news that is likely to move that currency and currency pair? And then you also have to look at the related markets. As I said, if it's something with a Canadian dollar, then you've got to be aware that oil is also going to move it. So from a very simple question saying, well, what should I trade? This is my time frame. What's the best pairs to select? There is an awful lot of considerations that you have to take into account. It's not a simple answer. Is there anything else you want to say to that, David? I can't think of anything else that you want to say. I'm sorry if you want a simple answer, I cannot give you that, because this is not a simple market. It's marketed as, oh, this is, all you're being asked to do here is to decide whether something is going up or going down. What could be easier? I tell you, if it was that easy, so many traders would not find it so difficult. But if you understand price action and you understand, as I said, the complexity of this market and how to tease it apart, which is why we've developed these indicators in the first place, you will have a huge advantage over your fellow traders.
Just to add a little bit further to what Anna was saying, I think what it also comes down to is whether you believe you have the discipline to reduce yourself to or restrict yourself to a certain number of pairs. If you have, that's great. If you haven't, then you have to recognize that fact, because what will happen is that if you decide, for example, that you're going to trade just 3 or 4 pairs, then if you don't have the discipline to stick to those 3 or 4, you will get bored, because boredom will kick in, because as a trader, your natural inclination is, I want to be trading. And if the pairs that you selected are not offering trades, then you will go off. I can guarantee you will go off and start looking at other pairs and searching out something to trade. So that's what it comes down to at the end of the day. It comes down to whether you have that inbuilt discipline to restrict yourself to a handful of pairs. There's no right or wrong answer. It will suit some people and it won't suit others. As to which pairs you select, as Anna said, that will depend very much on where you are in the world, how much time you have available, whether you're sat in front of your screen all day long or not, because if you're not, then that will dictate what you can and cannot do. And It also depends on the spreads. If you're trying to scalp and you're trying to scalp on those currency pairs which have wide spreads, which have a little bit more volatility, you're going to be struggling. So there's a whole raft of factors, but not least of all is the actual discipline. The other point I would also make is this, which really follows on from that, which is this. Are you also going to be a specialist, if you will, in one particular tactic? For example, are you going to look for congestion phases and thereafter breakaways? Perfectly valid. Are you going to be a reversal trader? Are you going to take advantage of the CSI, for example? Are you going to look for those points at which currencies are very overbought, oversold, and sit and wait? That comes back to patience. If you have patience and you can restrict yourself to a handful of pairs, then you've probably also got the patience to sit through congestion phases, knowing full well that a trend will develop and you'll be in early rather than getting in a little bit later, which leads on to the next question, which is, are you going to be a trend trader? Is that your modus operandi? What's your preferred? Or throwing everything together, are you going to be completely indiscriminate, trade anything that moves, all 28 pairs, and employ any tactic you care to employ from your toolbox as they come along, one after the other? These are the things you have to decide. And I can't tell you what's right and what's wrong for you, because you have to find that for yourself. It's not easy. We've been doing this for a long, long time. So for us, I would say generally we will migrate by instinct to the more volatile pairs, because we're quite happy trading the more volatile pairs because they deliver more quickly for us. But as a novice trader or someone starting out, we wouldn't suggest that. The other thing you also have to be very aware of is, and I think we wrote somewhere about this not so long ago, but if you scroll back 10 years and someone asked that question, then I would automatically say, as a London trader, for example, the first pair you would look at would be cable, because cable 10 years ago, or probably about 5 years ago, would move in a very, excuse me, I'm just going to switch off for a minute, would move in a very measured way. It would, I think the analogy we always use was like Big Ben. It just tick-tock, tick-tock, along it. And also, more importantly, when the fundamental news came along for the UK, I'm not saying it would be easy, but you had a much more straightforward approach to fundamental news and how the market would react. So, top of your list would be cable. I wouldn't suggest that at all at the moment because of the volatility that we're experiencing and have done for the last 2 or 3 years since Brexit. The characteristic of the pound has changed beyond all recognition. So as a novice trader, would I be recommending the pound? Certainly not at the moment, because you get cut to ribbons whenever someone says anything or indicates, or there's a rumor or anything to do with Brexit. It's just, that's the fact of life of trading the British pound right now. The same is true to some extent of the euro. I'll pass back to Anna. She can fill you on all the Italian goings on today. But the euro is very much the same. Not as bad as it was 2 or 3 years ago, perhaps a little bit longer than that. The characteristic of the euro was it could be all over the place depending on what crisis was going to hit the European Union next. That has dissipated to some extent. Now we've got the Italians in the background. So again, you've got to consider, do I want to be trading a currency that is subject to that sort of volatile reaction on an intraday basis? Longer term, if you're a slower term trader, it's not so much of an issue. If you're trading the pound and you're quite happy to trade that over hours and days, that's fine. But as an intraday trader, who knows what's going to happen in the next 5 minutes? Someone may say something in Europe and bang, it goes down, it goes up at the speed of light. Do you want to be trading pairs with that sort of volatility? Those are decisions you have to make. At the moment, what would you suggest? Well, you'd look at the Aussie, for example, the Canadian, a bit more commodity currencies, and you perhaps match those with a euro, maybe with a pound, to sort of soften the political aspect of it. But nevertheless, if there's volatile news on the pound, you'll see it pretty much across all the pairs. Strongest probably in the euro dollar, probably in the pound dollar and euro pound. But it's universally reflected. So you've got to factor all that in as well and understand what is going on in terms of the broad market and the characteristics of currencies and where they are in terms of how they're performing right now and likely to perform over the next sort of 12, 18 months as a characteristic of their profile makeup, if you will. So there's a whole raft of things you have to consider and what suits you. Just going to pass back to Anna at that point.
While just David was speaking, I just had a closer look at the volatility calculator on investing.com, and it really is worth investigating, because as you've probably noticed, I've been flicking up and down you just highlight the different pairs, and you can see kind of typical pip movement. I think this is over 10 weeks. Now, this is the pound dollar here, and it's got a sort of average of 95, but what it also does, it tells you the time of day. This is what this value is down here. So it's obviously comes into its own, as we see here, 7 o'clock, 8, 9, then it rises up during the New York session, and then by the time it's 4 o'clock, we've got the London fix, and then it gradually fades away. This is what I said. This is the pattern for the pound dollar. It will be the same for any of euro pound, and but if you compare that with the pound yen, where it's a little bit more volatile, and you can see here you've got the same pattern, a huge surge in 7 o'clock, 8 o'clock, and again a bit of a tail off overnight, but not so much of a tail off. Why? Because it's got a yen in the as the pair. It's not against the US dollar. But if you go up here and you think, oh well, I'm going to choose one where there's lots of movement, let's have a look at the dollar peso, Mexican peso, and boy oh boy, you know, look at the pip values. It's obviously traded very, very heavily during the American session, and practically nothing overnight. And you think, well, that's the one I'm going to go for. There's lots of movement in there. I can make a lot of a lot of money. But you have to be aware of, well, does your what kind of margin requirement does your broker demand of you to trade such a volatile pair? They may put a cap on you. There's all these factors to take into account. But the first place to start, as I said, is to start with understanding as I said, not only the characteristics of the individual currency in terms of when it is likely to move in this 24-hour period, because not all sessions are created equally, as we can see here. Because if all sessions were equally, all these pairs would move at the same rate, as it were. Let's have a look at let's look at the pound CAD here. Yes, the pound CAD. When is that much more, it's much more active, if you like? Well, it's going to be active because London is open, Canada is open, North America is open, and then overnight, well, it tends to fall away. That is very typical. So that's the first thing. Then you go and have a look at you match it with another currency, and as I said, on the actual session itself. And it's a tool. This one over at investing.com is a great way to do some research. Sorry, I know we spent a little bit of time on that. I hope, as I said, a lot of traders find it is because you only have, it's not like stocks, you only have 28 pairs. So the temptation is to think, oh, well, I've only got 28. There'll always be something moving somewhere. And as David said, it's the boredom factor. And it's also, if you then restrict yourself and you're sitting there waiting for a particular setup that you like to trade, either a reversal or a breakaway, whatever it is that you like to take advantage of, and you glance over at something else and you think, oh my goodness, there's this enormous move in this pair that I'm not trading at the moment. Well, that's just the fact of life, and it does take a lot of discipline. And I think that's all I want to say on that. David, is there anything you want to say? Or that's it. Now that actually brings us nicely to another question that we had, and that is, we have developed what we call our currency dashboard. Not everybody has this. A lot of our traders just have the maybe the CSI. This is made up of 4 indicators, where we have the currency strength indicator, we have a currency matrix, we have an array, and we have the heat map. And in fact, I was going to talk about the heat map because I'm looking at the heat map at the moment for extremes. One of the reasons I like the heat map, I like to be in trades a little bit longer. I don't have so much time anymore to sit in front of my screen to use the faster time frames. So I'm looking for those pairs that are, as I said, at an at an extreme. So I'm looking at the moment at the New Zealand Swiss. That obviously the New Zealand is very has been bought quite heavily, but I tend to use this with much slower time frame charts. I'm even looking out onto the weekly because I'm looking to hold for a period of time. But that's just, you know, we developed the heat map as that's one of the purposes that we've developed the heat map for. But I'm going to pass over to David because you've got it set up on Ninja, haven't you, David? Yeah, yeah. And it's basically, as I said, it's someone who's actually bought this suite of indicators, had this question, and it's just easier for us to explain in a session like this because it also shows us what's happening in real time as well. I'll pass over to you, love.
Just switching screens, just pull up the my Ninja Trader screen. There we go, it should be coming up, just looking over Anna's shoulder, that's fine. I've got this on a 5 minute, and let's just go to the CSI. And basically, I'll try and explain this in a very simple way, hopefully, and also, yeah, I'm just going to pass back to Anna. She just wants to say something else. Hold on.
Sorry, I knew I was something I was going to say. Another question we had, which is with the CSI and with the tools, is they wanted a situation where everything lined up in all the time frames. Do you remember? Yes. I'm only going to take a trade when I see everything lining up in all. Here we are. Brexit worries. Well, there we are. You see. Everything perfectly lined up, so I can then, you know, to take the trade in all the time frames. Well, that is to fundamentally misunderstand how the price cycle works. Because if you're waiting for a setup when the weekly, the daily, and all time frames, you know, lower down are all going to be in like the stars in perfect alignment, it's not really going to work that way. I mean, even the planets don't work that way. They move at different speeds and they what's called retrograde and come forward, and you know, it's a little bit more complex than that. So that's just what I wanted to add. Okay.
Thanks, darling. And it constantly comes back. That question comes back to what I alluded to earlier on, which is this whole issue of defining your time horizon and what it is you're trying to do on this particular trading opportunity. And that's really what it comes down to, because once you've defined that, define what you're trying to do it, make some money or not, get stopped out and get on to the next one. And don't try to bend something that you created in a fast time frame to fit into a slower time frame. The currency dashboard is composed of 4 indicators: the currency strength indicator, the currency array, the currency matrix, and the currency heat map. So let's just start with the currency strength indicator because it's always the one we start with. This breaks the market down into the individual components of the Forex world, the currencies themselves. I've got a 5 minute here, and this really illustrates the issue that we have to deal with, because if we go up to the 15, I make no bones about it, I like to trade reversals because I'm a greedy Watsit and I want to get in early, and I'm quite happy to take a position and be patient and wait. I mean, if we go to, I've got the New Zealand yen here at the moment. I am waiting. I'm waiting. This is where are we? This is 4 o'clock our time, so this is deep in Asia, overnight for us. So this is 4 o'clock in the morning our time. We're now at 7:30, 7:45. We're coming up to the European Open 8 o'clock. So this is a good sort of 5 or 6 hour patience you've got to sit through of basically price action that's oscillating around the volume point of control. And we've got some fairly strong resistance overhead, but you know, it's oscillating around this price point. And what we're waiting for now is the potential reversal to come in. What's interesting right now is literally as I'm talking, the volatility indicator has been triggered. It means we've got some activity, we've got participation. We should see some decent volume under this candle, depending on how and where it closes. Our expectation at the very least is probably further congestion. We may see a breakaway based on this, but a breakaway will have to close away from this particular candle but a good sign for us as a potential breakaway trader on this move is that we've got volatility coming into the market. That means participation. That means the big boys are coming in. Something's going on. It might be news, it might be rumor, could be any damn thing, but we know for a fact we've got some volatility coming in, and the volatility has triggered within real time. So we know for a fact we've already moved outside the average true range on that particular piece of price action. I divert. Let's go back to the CSI. Okay, what's happening on the CSI? The New Zealand very strongly overbought, same as the Aussie dollar overnight, pretty strong moves. And equally to the downside, you've got pretty strong moves in the yen, you've got Swiss franc down here as well. You then step up to a different time frame, so you're up to the 15. What's happening on 15? New Zealand dollar up here, the grey line, very strongly overbought. Down at the bottom here, what will we be looking at? We could look at the Swiss franc, which was equally oversold down here, and also the yen, which is now starting to tick up. Again, very heavily oversold on the 15-minute time horizon. Now, what's happening on the 5-minute is it's rolled over, but it's a bit flatline at the moment. But at 15, we're just starting to see that kick over. If that develops into a longer-term reversal trend, and I can't tell you whether it will or not right now, and that's the risk that you take as a reversal trader, because at the moment, I don't know whether this is going to carry on at this level. It could go a little bit higher. It could stay here for some time, but ultimately, at some point, it will sell off. It has to, because all currencies do. They constantly move from overbought to oversold and back again. So if the move in the 5-minute ripples through to the 15-minute, terrific, we will start to see the trend develop and the reversal start to take shape. Equally, up on the 30, there'll be 30-minute time frame on the CSI, be very little movement right now because you're down to a pretty slow time frame. And what you're looking at constantly is whether what you're seeing on the fast time frame is actually a pullback reversal in a longer term trend, or is actually a reversal in a trend. In other words, from a primary to a primary, or is it a reversal which is only a secondary pullback within the primary trend? So that's always the starting point. The next point you go to, or the next, you then start to move to the currency. That's step one, if you like. Step two, you start to go to the matrix. And what you're looking for here is, let me just pop this all back on again. I've got this on a 5-minute. I've isolated out the dollar there. Let's just isolate out the yen. What you're looking at on the yen currency matrix is what is actually going on in terms of associated pairs. We're looking at the New Zealand yen here, which is sort of mid-table. And it's actually a very mixed picture on the 5-minute time horizon at the moment. There's not a lot of uniformity. What you're looking for on the matrix is you're looking for sentiment towards that particular currency pair. Is the flow of sentiment moving in the same direction? In other words, are these pairs all moving in the same direction, or are you seeing a mixture of buying and selling? Now, with the yen as the counter currency, it's very easy to see because all of these should be moving in one direction or the other in lockstep together, because the yen is the counter currency. So it's very easy to see. At the moment, what we're seeing is a little bit of a mixed picture, because we've got buying of the dollar and selling of the yen up here, and against the euro, we've got selling of the euro and buying of the yen. So just on one time frame, this is 5-minute, and of course you do this in multiple time frames as well. It's a little bit of a mixed picture. So if you're going to be trading something like the New Zealand yen, I'd suggest at the moment that sentiment towards the yen is mixed. It's not universal. There's some buying, there's some selling. So it's not probably or possibly the best pair to choose. You then go to step 3, which is to look at the array. And what the array does is not only gives you that information, but it also gives you information about the strength of the trend and also whether a pair is potentially approaching on this ranking ladder either an overbought state, which is the OB in brackets. That's approaching, and when it goes to a full-blown, potentially overbought state, it goes to bright blue without the brackets. And down the bottom, you'd have the equivalent, which is dark red in brackets, or bright red when it's reached a potentially oversold situation. So that's the next stage. That is what you're looking at. You're looking at potential overbought, oversold opportunities for those currency pairs. And in addition to that, what this is telling you is the strength of trend on that particular time frame. So in other words, on a 5-minute chart, what is the strength of trend? Where is the strongest trend? And in addition to that, we've got the CAD yen, Swiss yen, pound yen, they're all ranked up here. In addition to that, it's also telling you whether the sentiment is universal, and if so, how strong, and which is the strongest pair and which is the weakest pair in terms of that trend which is in play right now. And those are the steps you take. Now, obviously, the indicators are there to try and give you all that information as guidance. Thereafter, you then move to the price charts, your chosen time horizon. You'll be looking at it in multiple time frames. You'll be looking at all the other aspects, the volume price analysis aspects. You'll be looking at support and resistance. You'll be looking at congestion. You'll be looking at regions of price, all those sorts of things, the volume point of control, where are we, in your multiple time frame analysis. So this is the 3-step process, if you will. And the 4th step is really where you move to the currency heat map, which is your overarching umbrella, if you will. It gives you that information. And the reason we developed it was really to try and condense into one indicator all the various time frames so that you don't have a myriad of charts. Of course, you're going to look at the price charts, but what it gives you is an instant heads up. If you're a fast trader, you're down here, you're looking at bullish sentiment. You know, what am I seeing at the moment across my chosen time window? If I'm from 1 to 15 or 5 to 15 or 5 to 30, you know, what's going on in my chosen pair? You can also bookmark them as here. And that will give you the additional information without having to have multiple screens running, but at least it gives you that sense of where the bullish or bearish sentiment is flowing and how strongly it's flowing from the currency array. And the final element, if you will, is the ranking ladder here, which takes it to the slower time frame aspect of trading. So if you're moving much more towards the hourly, the 4-hourly, and the daily, then you're looking at the ranking ladder here for potentially, first of all, opportunities, again, where you could be trading off extremes. So you're looking at, what's ranking at the bottom, what's ranking at the top, because these are all weighted according to the bullish or bearish sentiment that's reflected across these time horizons. So for a slower time frame, for example, a 4-hourly will carry more weight than an hourly, a daily will carry more weight than a 4-hour, and so on and so forth. The least weight will be carried by the faster time frames, the 1-minute, 5-minute, or 10-minute. And that's how these rankings are arrived at. So you're looking once again at a ranking which is based on weighting, which is looking at how those pairs rank against one another and given the weighting of bearish or bullish sentiment across the time horizons. These will not move up and down in the same way as they do on the currency matrix. The currency matrix on a 5-minute time frame will tell you instantly what that flow is up and down the ladder on a 5-minute or a 1-minute or a 2-minute, whatever it may be. That data is drawn from here, but it doesn't display in that way. That's why the currency matrix is so powerful. But what the array then does is takes that information and gives you a much slower perspective on where those currency pairs are in their longer term travel. And when I say longer term, you would expect to see these move, as Anna mentioned earlier on, our time is quite limited at the moment. So these pairs will move over hours, they won't move over minutes. So the ranking ladder won't change. If you looked at this in 5 minutes time, it's not going to change. But if you looked at it in 2 or 3 hours time, one of them may have dropped down a little bit depending on what's going on. And if you look at it at the end of the day, it certainly will have changed a little bit. Maybe they've moved 1 or 2 slots on the ranking ladder, depending on what's going on, the strength of the trend, obviously. Those are the steps that you go through in the currency dashboard and how to apply the indicators. But once you've got that information, then it's over to the chart. You're looking at the chart for all those various aspects of price behavior, volume price analysis, support and resistance, the volume point of control, the trend monitor, and pulling in all the other indicators here. I mean, this is just classic congestion we've got at the moment. It's something we cover in the program, where you've got the pivot highs, pivot lows. They give you the information about what is going on. Of course, you know you've got congestion because you're at the volume point of control. You've got the deepest area of volume here. And then you'll be looking at support and resistance. You'll be looking at your volume, what's going on in terms of other markets. And in addition, as I say, we had this volatility came in. That's how the candle closed. What's our expectation? What's our anticipation? Our anticipation is we're going to see further congestion, because that's what the volatility indicator tends to tell us 8 or 9 times out of 10. Not always, but we have to be patient. And if you're waiting for a trade to develop, you've got to be patient. I'm just going to pass back to Anna.
Sorry, to go back to the investing.com site, but I think I was just playing around with it. And when I said to you earlier about currencies and currency pairs that move the most in to discover which move the most in different time zones, as it were. Well, this is the pound Aussie. Now, the pound, obviously, the British pound, it's going to be very active at this time, and Europe, and also when New York opens. But when it's crossed with the Aussie dollar, which moves during the Asia session, you can see here. This is a chart you need to consider and look at these bars here. You can see that it's it's also traded reasonably actively during the Asia Pacific Forex session. You can see by the number, not hugely, 20 pips. So it's what we call one as it's a more measured pair. So, and that's the other thing you have to bear in mind is okay, you say, well, I don't want a pair with a lot of volatility because when you don't have a huge trading capital, the danger with trying to turn that quickly, the temptation is to go for very volatile pairs that move very, very quickly. So you can make money very fast, but you can lose money very fast as well. So you perhaps think, okay, I don't have a lot of capital, so I'm going to look for something that's a little bit more measured. Now, measured can also translate into, as David said, you're going to get bored, let's be honest, because there's always something moving 100 pips, or in the case of the Mexican peso, thousands of pips. But that comes at a considerable cost. So you look at something such as the pound Aussie, and you can see here the times when. So if you put it is also active at these other periods. Now, that also begs the question that, okay, we know you're going to get some movement. So if you're looking to stay into trades, maybe over sessions, so you're going to say maybe day or 2 days, it's going to be moving for us overnight. Now, that could be a good thing or a bad thing, because it could then be impacted by Aussie news. So you could be in a very nice trade coming into London, New York, and it ticks along, it dies off, and then you have an important piece of Aussie news, and it will react, as it were. And you may or may not want that. So, as I said, from a very simple question, a lot of complexity. But I hope that has given you perhaps some food for thought, and maybe has suggested to you that, as I said, this is presented as a very simple market, and it isn't. There are a lot of things that you have to appreciate, and then certainly going to do some research on maybe the currency and currency pairs that you have been considering or even have been trading. I have to say, even if you have some pairs that you like to trade, and you get to know, the other thing is you get to know them, you get to know their characteristics, you get to know, of the central bank members, for example, when one of these characters speaks, who is likely to, create a reaction in the currency and currency pairs. I said earlier, that Merkel was addressing the Strasbourg Parliament. No, it's not actually on any. I can't find it on an economic calendar, but I know she is, because I double checked. It's at 2 o'clock this afternoon, and obviously with Brexit going on, I don't know what she's going to say, anything contentious, but she very rarely makes sort of speeches. So maybe the market is going to be listening out for what she has to say. And as I said, and obviously you have the issues with Italy as well. And of course, there's all the technical aspects that you then have to consider, what is happening to the price action. You know, you have to blend these two things, you know, these all these things together. But everybody starts with the price action and the chart, and there's absolutely nothing wrong with that at all. And we've got New Zealand running to near-term resistance, support, resistance, important levels, flows. At least with volume price analysis is about, this market, we always say, is about levels and flow. The flow is the activity, is the money going into a currency and currency pair for all sorts of reasons. So is there anything else you want to say, David? I know we've kind of gone a bit off piste, as it were, today. We've looked at we've sort of approached the session from a slightly different perspective and not really paid an awful lot of attention to the actual charts itself. But I do like looking at cable. But we've got 5 minutes to London. We've got, as I said, we had the dollar index struggling at that level. That's obviously being reflected in cable. Being driven by what the dollar is doing, clearly, but also what is happening with Brexit or not. And this is my, I've got the weekly chart up here. Sorry, apologies on that. Let's put the 30-minute chart on there. Yes, and this is my typical workspace. And there's always a really nice setup coming up just before London, but I've been burnt far too many times in the past to be seduced into taking a trade just before, you know, literally 5 minutes before London, because David and I know the little tricks that are always played at this time. Is there anything you want? Anything you've got to say over there? Do you want to? Okay. Okay. I think on that, actually, given that we've not really, you know, focused on the charts in great detail because we wanted to cover all these other topics, I'm actually going to stop it there today, sort of a few minutes before London. As I said, I really hope that's answered some of the questions I know that have been asked. I've had emails and what have you. But if you have other questions, then please just do drop me a line as anna@annacooling.com. The indicators that we've been showing are from quantumtrading.com. David and I originally developed them for our own trading and really to support our volume price analysis methodology. You can just buy one, you can buy discounted bundle, or you can buy the complete package. And in fact, just here, actually got it here on the MT4. This is the actual site itself. There's a ton of videos, not just about the indicators, but also how to use MT4 and MT5 platform as well. There's videos, there's support pages, all the information is there. If you do buy the complete package, you actually get indicators added to them. So as we develop new ones, you only ever pay us once. It's a lifetime license. All upgrades are free, and as I said, and all future indicators are free as well, but only if you buy the complete package. And there's a 7-day money back guarantee. If you find this not for you, we're always on support. We genuinely cover a 24-hour period. We have people over in the Far East as well, 365 days of the year, and you can transfer from platform to platform. But there is a slight difference in price for the platform. So if you start off with MT45, it's $894. That's for the complete package, and the Ninja Trader is slightly more expensive because there are more indicators for Ninja. This is us here. This is on. This is actually taken from our education program. This is the cost of the education program. There's always a slight confusion. I'm really sorry for this. I'm going to redo this slide. Basically, the program for MT45 is 1391 and for Ninja is 1694. But that includes the indicators. And if you've bought them, if you've already bought them and you want to upgrade to the program, you only pay the difference. And even if you've only bought 1 or 2 indicators, you always get a credit for what you have paid us. And finally, it's 50 hours of videos, video podcasts, downloads, and it is self-directed. You can find more information at Quantum Trading Education. You can drop me an email, anna@annacooling.com. And finally, I know I haven't got a slide on this one. We do have a chat room for VPA traders, which you are more than welcome to join. There are people on the program there. There are stock traders, there are commodity traders. We encourage people to put their charts up. There are people who have only just bought the books. It's really volume price analysis. If you want to join, you need to send me an email, anna@annacooling.com. That's it. Anything else you want to say, David? Or have I covered everything? I think that's covered everything. And all it remains for me to say is, yep, right, the cost, Linley, right. It is the difference between whatever you've paid us, it's that difference. So whatever you paid is whatever it is for the for if you're NT4, it's less than $500. As I say, that's all you. Sorry, it's $497. So if you've got the full package, only pay us for the difference. So as I said, you don't pay us. We don't expect you to pay for another set of indicators. So thank you so much for coming along. It's today. I hope you've learned something maybe that you weren't aware of before. So please go ahead and do some research on your currency pairs. Use the investing.com site. It's a brilliant site, and really get to know the what it is that you're looking to trade. Restrict yourself to choose 5, 3, 4, 5 pairs, and it's really then developing the discipline to stick to those 3 or 4 pairs. And it's going to be difficult because there's always something much more exciting going on elsewhere. I do apologize. We both had really bad coughs. Have a great day. We'll catch you next time. Take care. Bye.